you have made it to the How to Code a Rental Property Sell HUD Statement video. Okay, so this is huge. You've gone through the flipping videos, you've gone through the how to code a rental purchase HUD statement, a refinance, which people get tripped up on, and now you or your client is selling a rental property. Okay, so this is going to be not incredibly complex, but you really just need to keep in mind that there are balances on the balance sheet for any and every rental property, right? CapEx, tax, the building basis, the land basis, depreciation has probably been logged in some sort. There's loans on there. There might be escrow accounts. All of that stuff has to be zeroed out through the Sell HUD journal entry. Okay, and so we're not only working with the rental property, HUD, the Sell HUD statement, we are also working with the balance sheet to see what needs to be zeroed out. Okay, so all of this is going to be done through, through one journal entry. We could do two different journal entries, I guess, but it really makes more sense to do this through one journal entry. And just keep in mind, rental properties are fixed assets. So if you have just basic bookkeeping knowledge, maybe you've been through Bookkeeper Launch like I have, or another bookkeeping course like that, this is just like disposing of a fixed asset. Okay, and so if you've been through any sort of bookkeeping course or even just YouTubed, how to dispose of an asset on the books, it's just like that. It's just going to have some more line items because, as we know, real estate investing is a little more complicated than most industries as far as accounting goes. So there's just a lot more line items and manual work to be done to get these transactions processed, right? So as with anything, we're going to reference, as with any HUD statement, we're going to first reference the HUD statement. Okay, so let me orient it to you. So this may look familiar. I went through this same HUD statement in the flip sell HUD statement video. Okay, and so we were concerned with 119 Layla. This time we are concerned, which we're pretending was a flip. This time we are concerned with 1740 Springwoods, which we are saying for the purposes of this course is a rental property and has been a rental property. We have booked, rental transactions toward this property. Okay. Now, these two properties are on this HUD statement. So check out the settlement date and any miscellaneous and any other information that you need to check out on the top of the HUD statement. And now let's get into the numbers. Okay, so for the purposes of this course, we are pretending that 1740 Springwoods is the only property on this HUD statement. Okay, and so what that means is this contract sales price is actually cut in half to $190K. These settlement charges are cut in half to $12K and some change, whatever that is. We are only concerned with the Regions Bank loan, which is the loan tied to 1740. We are only concerned with half, so $1,500 worth of seller paid concessions. We are the seller, or our client is the seller in this case. So $1,500 for 1740. These security deposits are for 1740, so $625 and $895. Those will get booked against our security deposit other current liability account and zero it out. Springwood's taxes is all we're concerned with, so not the Layla taxes, just the Springwood taxes. And then this cash to seller, so the proceeds from the sell, this is going to go down to right around $75K from what I've calculated, rather than what you see here as the $148K. Okay, I know this can be a bit confusing, especially if you're not even familiar with HUD statements. If you're not, go back and watch, my video explaining how HUD statements work, and maybe some other videos to get familiar. Okay. For the settlement charges, we are on this column. So commissions paid, we're going to cut this in half to $11,400. I hope I did my math right. Staying in this column, which is the seller's column, which is us or our client. So this 500 document preparation, this goes to $250. 20 recording fee goes to 10, 1406 goes to 703, 70 goes to 35, and then 180 goes to 90. Okay, and so all these added up, we can just kind of, count these. We could count these together just as closing costs, right? I like to split out the realtor commissions paid, okay, just for granularity, just for, just what I like to see on a set of books. But I guess you could say, have an account that says, an expense account that says rental sell closing cost. And you could just, book the total settlement charges on the seller's side to that account. Okay. In our case, we cut it in half because we are pretending, again, that 1740 Springwoods Lake Drive is the only property included on this HUD statement for the purposes of this specific video for this specific course. Okay. Awesome. Now that we're familiar with this, so we said, so for my calculations, and what would normally just be on the HUD statement would be the cash to seller, right, after selling the property, so the proceeds that goes to the seller. And that number, referencing the journal entry that I've already input, that number is $75,110.10. So we would normally get that figure off of the HUD statement right here, cash to seller. That would be right here. So 75K and some change would normally be right there, all right, in our scenario. So we would go to the banking tab. And, for this account, let's say it flowed through the income account, you're going to search that 75K and some change number here, make sure it's the exact number, including cents, or QuickBooks may not recognize it. And then you're going to see if it's in the bank feed. If it is in the bank feed, then that is the bank feed transaction you're going to match your journal entry to. If it's not, either, in this case, I know that these proceeds went to a, personal account for this scenario. They went to a personal account. If you're serving a client and, you can't find this figure in their bank feed, just like, every other HUD statement video, then go to that client and ask them if it's the correct number, or if maybe the proceeds went to an account outside of their QuickBooks that's not linked to their QuickBooks, maybe a personal account or something like that, right? Which for this video, they did go to a personal account. And so we're counting that as a member distribution. So that's our cash to close line item. Okay. So let's get into this journal entry. All right. Actually, before we even get to the journal entry, we need to visit. Here we go. I'll let the picture load. We need to visit the balance sheet. So reports, go all dates, totals only, cash, negative number, customization that we like, show in red, and then the property we're concerned with. And we want an all dates balance sheet for that property just to see what we're working with. Okay, so we have PITI escrow that will be cleared out. We don't need to clear this out within the journal entry, because as long as it is accurate and up to date with what the lender shows, the lender normally issues a refund check to the seller who just closed their loan after selling the property. They normally issue a refund for whatever they had in escrow. Okay, so this will get cleared out via that check that this real estate investor will receive from the lender. Okay, no need to worry about that. These are accounts that we need to clear out, right? So these are basis accounts. So we got land, appreciation for the building, original cost for the building, some purchase closing costs. We have some CapEx, okay? Not sure why new HVAC 102. I'm not sure why that's showing such a heavy figure. Let me run this report again. And it's still showing that. So I'm going to pause it and I'll bring you right back. Okay, we're back. Sometimes this happens. As it turns out, QuickBooks was just glitching. And so they had some figures from down here somehow showing up here in the new HVAC CapEx line item, which is weird. I know. I'll move on so I don't waste your time. Security deposits from tenants. this should line up with what is being, essentially transferred to the buyer of the property at closing. Okay, so it's a debit for us, and so this is going to clear out to zero once we input our HUD statement journal entry. Conventional loans, again, as long as your books are up to date or your client's books are up to date, this conventional loan figure right here, the principal balance, should match the principal balance on the payoff statement from the lender. So you need to get a copy of that, okay? Or just ask them, just email them, say, hey, what's the principal balance payoff? If you can't see it within your online portal or your client's online portal, and just ensure that what is on the HUD statement matches what you have here that's being paid off in principal. In this case, it does, thankfully. If it doesn't match, then it's probably a principal. What's on the HUD statement is probably a principal amount plus interest, right? So you just need to split it out in your journal entry and you're fine. And your journal entry will still reconcile overall, okay? And this will be cleared out to zero, and then the rest goes to interest. Okay, member contributions, distributions, these need to be cleared out since we are selling this property, we're getting rid of this property, or your client is getting rid of this rental property, okay? So these will be cleared out naturally via the line items on the HUD statement. So I'm actually gonna minimize this. So what we need to clear out essentially manually via the journal entry, that figures that are not included on the HUD statement, are all of these. So all the basis for the property, CapEx, land, building, closing costs, and then these right here, member contributions and distributions. So as I stated in a previous video, I like to use the snipping tool, and I have already snipped a screenshot of this, but I go from corner to corner, get my screenshot, put it on my other screen, and now I know what entries I need to make outside of the HUD statement. So I actually start with this stuff, okay? So you can see up here, there we go. Let me move this so I don't get in the way of you guys. Okay, and so I guess starting from the top for the journal entry, don't let me get ahead. Journal date, that's going to be the disbursement date on the HUD statement, all right? If it just has a settlement date, then put the settlement date. Nice searchable journal entry, so property address, sell. You're not going to check adjusting journal entry because this is physical cash, going out or coming into the business. All right, so now we want to start to zero out our balance sheet, and this is really only if your balance sheet is 100% accurate, right? So you need to consult with the tax professional to see your client's tax professional to see if what needs to be counted as kind of depreciation up until the sale. Get those journal entries in there so that you can reflect everything properly on the books. Okay, in this scenario, we are assuming that depreciation, everything that is currently on the books is 100% up to date. And so we are zeroing everything out as we should, disposing of an asset, okay? All right, so you can see here I have my land, depreciation, original costs, everything shown here on the balance sheet that we need to zero out, okay? So I'm just going down. These are asset accounts, so I'm crediting the asset account to zero it out. That makes sense, right? The depreciation is also an asset account, but it's a negative currently on the balance sheet. And so I am debiting it to cause a positive, and it's going to zero out. Building original costs, all these are asset accounts, right? So we're taking the figures from the balance sheet and we are zeroing them out by crediting for that exact amount, okay? Let's come down to member contributions. We're going to debit member contributions to cancel that out. We are going to credit member distributions to cancel that account out. And now we are getting to the HUD statement accounts, okay? So before I begin this is a weird thing that took me a while to wrap my head around, and it's still a little difficult for me to explain. I'll try in this video. So if you notice on the HUD statement, let's go back to the HUD statement. We have a contract sales price for our purposes and the purposes of this video and this course of $190,000, all right? But nowhere in this journal entry do you see a credit for $190,000, okay? Because when we're disposing of a fixed asset, we do not include the sales price, what we sold that asset for, or what our client sold that asset for, as a fixed asset. We do not include that within the journal entry because it skews all of the journal entry numbers and doesn't allow our journal entry to reconcile. Okay, so if you have taken a course, a professional bookkeeping course like Bookkeeper Launch, which is like a basic bookkeeping course, like I have gotten certified through some sort of other program or what have you, you will see in their program when they are disposing of, let's say, a vehicle that's on the books, that's a fixed asset, you will see they have the original costs, whatever has been taken through depreciation, and then whatever is left is the book value, and then whatever they sold it for. But within the journal entry, they do not have what they sold it for. They just have what's on the balance sheet that needs to be zeroed out. They do the contra figures to zero all of them out, and then whatever is left over is either a sales income gain or a sell or a loss, right? An expense. So in this case, we have a gain. So that's all I'm going to speak to that. If you need more details on that, and you haven't taken a basic bookkeeping course, I would recommend taking a basic bookkeeping course because they probably explain it way better than I do. I follow what they say because it works. And that's kind of as far as we're going to take that discussion in this video and in this course. Okay, so let's keep it moving. So with the HUD statement, we are starting with paying off that loan. Okay, and so if we go back to our HUD statement, the loan we are concerned with is the Regions Bank, so 97064 and some change. That's what we have here. Liability account, you're going to debit it to to cause a negative in the account to zero it out. Okay. All right. Seller concessions given at closing. That's that seller credit that to the buyer of $1,500. This is an expense account. Okay. Security deposits from tenants. Remember, we are transferring $895 plus $625 worth of tenant security deposits over to the buyer. Okay. And so that is a liability account. And so we are debiting the liability account to bring that to zero. Property taxes, this is just an expense account. And the property taxes on the HUD, straight off the HUD. Realtor commission expense, another expense account. We don't need to capitalize anything, right? Because we are disposing of this asset, all right? It's not going to be on the books anymore. Other than it's not going to be on the balance sheet anymore. It's going to be on, an income statement for this year. With a gain or with a loss or what have you, okay? Sell closing costs. So let's go back to the HUD statement and let's see everything on the settlement charges besides the realtor commission. So all these, I have put them into my rentals, sell closing costs, other expense account, okay? I like these items to show up down towards the bottom of the income statement because I don't consider it kind of normal for us as real estate investors or our clients as real estate investors to sell rental properties, right? We hold rental properties for the long term, but when we do decide to sell a rental property, we still account for it in this way. But that's just a personal preference of mine. I like the transactions associated with the sell. So whether it's a gain or a loss or, realtor commission and, sell closing costs, I like those things to show up towards the bottom of the income statement. That's just personal preference. If you want to make these, normal income and expense accounts, then feel free to do so. Also consult with your tax professional, but this is just how I do it. And I'm showing you how I do it for the purposes of this course. All right. Sell closing, hit that one. So member distribution. So again, if the proceeds from this sell flowed through QuickBooks Online through a bank account that is linked to QuickBooks Online, a bank fee transaction, then you would have that bank account here. Okay. In this case, for the purposes of this course and this video, the proceeds flowed to a personal account of this real estate investor, okay? And so we consider that a distribution from the business. All right, member distribution. And then what is left over, you see here, is our rental property sales income gain, okay? And no matter what this fixed asset is, it could be a vehicle, it could be a skid steer, it could be what have you. You are gonna either have a gain or a loss on the books, okay? And this isn't the true gain, okay? So I'm gonna hit save, and I'm actually going to get our property input to each of these lines. So I'll bring you back in a second when I have that. All right, we are back. So as you can see, I have the appropriate property in for each line item within this journal entry. Hopefully this stuff makes sense to you. If not, it will absolutely make sense once you do it, okay? Especially once you do it a few times. Okay, so I have the HUD statement that we've been working off of attached to this journal entry. You'll definitely want to do that so that you can have it for future reference, and other people looking at your books can have it for future reference. So now, if the proceeds went to a bank account that's linked to QuickBooks, preferably a business bank account, then now we would need to go to the bank feed, back to the bank feed, and we would need to match the bank feed transaction to this journal entry, okay? And again, if it doesn't match, check your journal date, make sure everything lines up to the bank feed transaction. Check your number here, just check everything, okay? And then it will, eventually you'll get it to match. Okay, so after we match the bank feed transaction, now we're gonna check our work. So save and close, go here to reports, pull a balance sheet, all dates, totals only, same balance sheet we were working with before, okay? Let's put my face down here. Customize, customer, get the property that you want, run the report, and here's the balance sheet. So as I said before, PITI escrow, that will be zeroed out after the sale once, this real estate investor receives a refund check from the lender they were using on this property, okay? And so that is, if you're serving a client, that's something to follow up with. Like, hey, have you received your refund check? You have some funds in escrow with the lender of the property, that you just sold. So that's a way that you can add value. So that'll be zeroed out once that comes through the bank feed and is appropriately categorized. You can see here the member distribution. So, since this didn't flow through a bank account, or a business bank account, this flowed through a personal account that is not linked to QuickBooks. It is shown here as a member distribution as far as the proceeds from the sale, okay? And you can see here our net income. And again, this rental property sales income gain, this is not the true gain, right? To get the true gain, we need to look at the income statement for the property, okay? The profit and loss. And so because this figure is going to be mixed with, rental income that was received over the life of this property, all the expenses associated, just kind of the full picture. So let's go take a look at that now. So you would go to reports and then click on profit and loss report, and then all dates, totals, cash, customize, our negative number customization, click on customer, 1740 Springwoods, which is the property that we want. And here is our, all dates, all inclusive income statement, okay? So we have a little bit of rent for there would probably be a lot more rent than that, but for the purposes of this course, I just added a little bit of rent for this property, right? Just to show it, okay? Some, expenses here, some loan interest, finance charges from previous closings, property taxes. We have some utilities here that are not capitalized, realtor commissions, your gain, you can see it here in other income from the sale, which is where I personally like to see it. I like to see it in other income. Seller concessions received at closing, so that's there as well. Seller concessions given at closing, we saw that with our journal entry and our HUD statement. Sale closing cost from the HUD statement we just entered. For the purposes of this video, I just wanted to show you here this, whatever this number is down here, that's the true gain or loss for the life of this fixed asset, the rental property that was just sold. So hopefully that makes sense to you. So this is how, your gain in the journal entry, right? meshes with all the other transactions that have happened outside of the balance sheet accounts. So I hope that makes sense. This is good to go. So now you have the tools you need to be able to process all rental HUD statements now and flipping HUD statements if you've watched those videos, right? So congratulations to you for getting through this. A long series of videos. Thank you so much for your time and sticking with it. On to the next video.